The S&P dropped 1% in the last 10 minutes of the market. We're going to explain why. S&P, this 390 level has been an issue for some time. You can see how it was support. Support, as we know, flips to resistance. We got there yesterday and then just completely rejected. We went through yesterday what was at this level and why this level was so significant. You can see the anchored VWAP going straight across and how you keep entering at this area if you're looking for short positions over and over again, and it's working like a charm. It's given you a signal 3 times since September 13th. But what happened at the end of the day? Why did we rally, and then why did we fall apart? So the S&P for the day literally opens up, comes back down. This is obviously the previous day. And then you just start to go sideways, and it seems like it's going to be a non-event. Then we have some news from Yellen that comes out, which is right around that area where you start getting a little bit of a push, right? Right around that 230 range, you'll start seeing the market start picking up, start getting a little stronger. And then it does exactly what it always does. It gives you a false positive, which is exactly what it did here. I actually had a short position on the indexes here. And what I did with it when it broke is I closed a portion of it, more than 50%, and I left the other portion on based upon confirmation that I was right. You can just simply put the position back on. Now, by doing that, managing that kind of position, it allows you to stay in the trade a little bit longer and see if you're going to be right or not. Now, if you broke above that level, 33.77.53, then you would know that you have a problem. You should probably get out of the way. So based upon that, now you're in this trade, and this trade worked out well at the end of the day. But why did this happen? Well, it's important to understand the timing that this happened. This happened at 15:50. What is that? That is 3:50 Eastern Standard Time. That is the last moment when the specialists and the market on close orders can be put to use. Now, if you use any service, you will see that early market on close imbalance was 253 million on the buy side. As the day went on, you can see that as you got closer, right? It starts around 330. As you got closer, they gave you 626 million on the sell side. So they flipped it a little bit on the sell side from buy to sell. But what they did was they wound up selling on their own without using market on close orders. It's a perfect setup. And that's exactly what they did. They ran the market up. They triggered everybody. They've been doing this over and over again in the market. That, when I say they, high frequency traders, institutional traders, they all know what we're looking at. And we're looking at these levels. When you flip over this level, everyone gets giddy and excitement because we're all thinking short squeeze and the market's going to run. And that's not what it did. So when you see things like this, they actually present opportunities to get into short positions in a market like this. Now, you're not going to know that unless you look under the hood at what else is going on. You have a massive option expiration date tomorrow. Now, whether or not that takes us back to this 370 or not remains to be seen. But understand that there are levels and magnitudes of games that are being played out there that people are they're just not aware of. So when you're cracking on the downside and it looks like it's going to go, take Tesla, for example, that's when it doesn't go, but then it goes later in the day. For example, here we are, and here's the entire move. So when we broke here, it got to a point where I kept wanting it to kind of rally up. Now, if you look at this with just something as simplistic as VWAP on the day, right, and just watch where you're at, when we got to this level, it looked like finally we might push up and through, and maybe we're going to reclaim some of that. That didn't happen. You rejected right here. Okay. Then you broke down, and then you broke this H. As soon as you broke this H, I wanted to start a short position. So I start here, not fully, but you start here. You know that this is really what you're trying to stay into, right? Because you should not be breaking VWAP. Look exactly where you got to. So you know that these levels are of significance. You know VWAP's of significance. You're in a super technical trading market. So what happened here? Triggered to buy based upon a specific pattern and a specific level. I'm not the only one that knows these levels, so they trigger them so that you get in. When that happens, they then reverse it. Everyone gets excited, thinks it's going to go higher, gets to that VWAP level, which is great for who? Institutional traders that are managing money or a book or a position. They are judged on where they're at in regards to VWAP by the end of the day. In other words, if I gave a large sell order to a trader sitting at Goldman or Morgan, and hey, sell a million Tesla, they're judged on where they're at near VWAP. If they're not better than VWAP on their sell orders, and lower than VWAP on their buy orders, it's an issue. Okay, and they're not going to want to do business with that trader, and they're going to go elsewhere. So when you got there, you saw this is exactly what you saw: boom, selling. That's why these levels reject. Okay, now you understand the why. Maybe pay a little more attention to the daily VWAP, right? Especially the daily, more than anything. So when you got there, now you rejected. Now the question is, what are you going to do? Right? What's next? And I do have a small short position in this right now. Well, you're going to have to see how this plays out tomorrow. But you are seeing some real serious cracks out there in the market. So we didn't get any kind of hold today whatsoever. And the gains that we saw at the end of the day in the last 10 minutes lead me to think that we're probably going to see more dumping out there. If you look at things like, and I won't trade my opinion, I'll only trade what happens. But it seems to me that there's more behind this. If you take a look at Costco, you're closed at 47. You had earnings tonight, and those earnings were not bad at all. But here you are, down $10. So it just doesn't really matter the reason. You're just getting to a point where everybody is just simply saying, I would like to get myself into a position where I have some cash to buy this pullback. Now, when everybody starts doing that, you can see some massive volatility moves. One of the key things that I would just simply point out to everyone is if you take a look at the SPY and you just take a look at the average true range on the SPY, this is very important for people to note. As the average true range goes up, the probability of the move gets greater and greater. And in the free newsletter last night that I put out, and there is a link in description, I explained this with the SPY, and I explained that yesterday's volume and volatility is clearly giving you a signal that there's a large move coming. Which way that large move is coming, that remains to be seen. But now you have your ATR kicking up, and you can see every single time the ATR kicks up, the stock sells off, right? So here we are again, and we're not really getting any relief. Some major levels are cracking across the board. So this needed to hold today, and it very simply did not hold at all. Now, you didn't take out that lower low from June yet, but you're sure setting up for it, and you're probably at a new closing low. Let's take a look at that right now. We closed at 338.29. And this was 337. So you're still above that one, 337. So you're still in that area, but this does not look great. Here's your bear flag. You broke down, you rallied, you failed the rally, and then you collapsed. If you're not going to lead, who's going to lead? And that really becomes the issue that we're seeing. And now they're starting to accelerate other names. And I think that's really pertinent. For example, this was one we actually shorted today, XBI. And we did it off the open and then just got out of the way. Made some money on it, but traded up. And this is what's happening with these types of funds. You know, everyone, just be aware, you need to get in and out of these usually, unless you're going to catch a major move. They're just way too volatile when they start to go the other way. But this looked like it was going to break out and went from there. It looked to me like it could push like some of the others, but you really just didn't see the selling there. But you're not really seeing any buying anywhere in anything tech related. You're just continually breaking down. If you take a look at what's going on right here on software, that's it. You cracked. So here's our level, and we've cracked on software, and we're rolling. So that's not going to bode well for XLK, right? And we know where that is. XLK is in the S&P. That's the technology fund in the S&P. So you're going to have to watch that as well. And you can just see how that's going to relate to the SPY, right? So take a look at Microsoft. Undercut and then rallies into the end of the day. I wouldn't put a whole lot of faith in that rally. Let's just see what happens tomorrow and get through tomorrow. You have a ton of options expiring. That's all I have for tonight. There will be a link to preview the trading community right here. I will be opening up for enrollment shortly. Everybody have a great evening.